What's happening, tech enthusiasts? Get ready to dive headfirst into the whirlwind of innovation and industry shifts that are defining our digital future. The pace of change is relentless, and if you're not plugged in, you're missing out. Today, we've got a lineup of must-know updates that are sending ripples across the tech landscape. First up, we're exploring the intricate dance between corporate ethics, ESG principles, and the growing power of employee activism within the tech sector, especially how geopolitical currents are charting Microsoft's course. Then, we'll delve into a significant development where employee actions have led to serious consequences, examining the fallout from protests on company policy and employment status. We're also keeping a close eye on the financial pulse, breaking down the latest stock analysis and market outlook for a major tech player, and uncovering how strategic partnerships and market dynamics are influencing share performance. Prepare for a deep dive into the forces shaping the tech world and the companies at its forefront. Make sure you're subscribed and hit that notification bell so you never miss an update. Let's get started. Corporate ethics under the microscope. In the rapidly evolving tech landscape, the concepts of corporate ethics and environmental, social, and governance (ESG) performance are no longer just buzzwords. They are critical determinants of a company's long-term viability and public perception. This is particularly true for tech giants like Microsoft, whose vast influence and global reach mean their actions and the principles they uphold have far-reaching consequences. The modern workforce, especially within the tech industry, is increasingly vocal and engaged, with employees leveraging their platforms and collective power to advocate for social and political causes. This trend of employee activism is directly intersecting with the complex web of geopolitical entanglements that characterize international business today, creating a dynamic environment where corporate decisions are scrutinized through multiple lenses. Employee-led movements are pushing companies to align their operations and public stances with specific ethical frameworks, often demanding greater transparency and accountability on issues ranging from environmental impact to human rights. Simultaneously, geopolitical tensions and international relations can significantly influence a company's supply chains, market access, and regulatory landscape, forcing them to navigate delicate diplomatic and ethical tightropes. For Microsoft, these forces are converging to shape its future in profound ways. The company must not only meet the expectations of its shareholders and customers, but also respond to the demands of its employees, who are increasingly seeking to align their work with their personal values. This internal pressure, combined with external geopolitical realities, creates a challenging but crucial environment for defining corporate responsibility. Understanding how employee activism and geopolitical factors intertwine is key to grasping the strategic decisions and ethical considerations that will define Microsoft's trajectory in the coming years, impacting everything from its product development to its global partnerships, and its very identity as a responsible corporate citizen in an increasingly interconnected world. The tech sector, in general, is at a crossroads, where innovation must be balanced with integrity, and where the internal voice of the workforce can be as powerful as any market force in shaping the company's path forward. This examination into Microsoft's unique position offers a window into the broader challenges and opportunities facing all major technology firms as they strive to operate ethically and responsibly on a global scale. Stay with us as we unpack the intricate dynamics at play. Next, we're diving into a story where these principles have led to very real, on-the-ground consequences for employees. Employee activism and company policy clash. In a significant development highlighting the tension between employee activism and corporate governance, Microsoft has reportedly terminated the employment of 2 workers following their arrest during a sit-in protest at the company's executive offices. The protest, organized by a group known as No Azure for Apartheid, aimed to pressure Microsoft to sever business ties with the Israeli military, citing concerns about the use of its technology in the conflict. The group stated that the employees, along with other participants in the demonstration, were among 7 individuals arrested by authorities on company premises. The protest specifically involved occupying a Microsoft executive building and renaming it in honor of a Palestinian software engineer who was reportedly killed in Gaza. According to reports, the terminated employees were informed of their dismissal via voicemails after losing access to their company accounts, with Microsoft citing serious breaches of company policies and its code of conduct as the basis for the terminations. A Microsoft spokesperson elaborated on the company's decision, stating that one employee violated the business conduct policy, participated in an unlawful break-in at executive offices, and had been arrested on campus on 2 separate occasions. The second employee was involved in the executive office break-in and subsequently arrested. These actions, the spokesperson noted, are inconsistent with the company's expectations for its employees, and Microsoft is cooperating with law enforcement while continuing its internal investigations. However, No Azure for Apartheid has contested the company's account, claiming the employees were not provided with specific reasons for their termination or informed of precise policy violations. A statement attributed to one of the fired employees expressed defiance, asserting that their actions were a response to Microsoft's continued provision of tools to Israel for what they termed genocide, and a refusal to allow their labor to be complicit in the mass murder of Palestinians. This protest is the latest in a series of demonstrations by the group, which has been advocating for months for Microsoft to end its business relationships with the Israeli military. Previous actions include arrests at the Redmond Microsoft campus on August 20th, where demonstrators reportedly set up tents, blocked a pedestrian bridge, and poured red paint on a Microsoft sign. The company has also stated it is reviewing allegations that the Israeli Defense Forces may be using its Azure cloud computing platform for mass surveillance of Palestinians. The group, No Azure for Apartheid, has announced plans for a press conference to further address the situation. This incident underscores the growing challenges companies face in balancing freedom of expression with the need to maintain order and adherence to internal policies, especially when employee activism intersects with sensitive geopolitical issues. These developments raise crucial questions about employee rights and corporate responsibility. Now, let's shift our focus to the financial landscape and what it means for the company's market performance. Navigating market volatility, a Microsoft outlook. In the dynamic and often unpredictable world of stock markets, analyzing the performance and future prospects of major technology companies requires a keen understanding of both internal strategies and external economic forces. Microsoft, a perennial titan in the tech industry, is currently presenting a complex picture, with analysts observing a mix of signals that suggest a period of cautious optimism amidst broader market volatility. The company's recent performance indicates a resilience that has become its hallmark, yet the broader economic climate and specific industry trends introduce elements of uncertainty that warrant close examination. Market conditions are currently characterized by fluctuating interest rates, shifting consumer spending patterns, and ongoing geopolitical developments, all of which can impact corporate valuations and investment strategies. For Microsoft, these external pressures are compounded by its own internal strategic adjustments and its significant investments in emerging technologies, such as artificial intelligence and cloud computing. The company's outlook is therefore a delicate balance between leveraging its dominant market positions in areas like its Windows operating system and Office suite, and adapting to the rapidly changing technological frontier. Analysts are closely monitoring how Microsoft's substantial investments in AI, particularly through its partnership with OpenAI, will translate into future revenue streams and market share gains. The integration of AI capabilities across its product portfolio, from Azure Cloud Services to its productivity software, is seen as a key growth driver. However, the substantial capital expenditure required for these advancements, coupled with the inherent risks of pioneering new technologies, introduces a degree of financial complexity. Furthermore, the company's performance is also being assessed against the backdrop of its competitors and the overall health of the digital economy. While Microsoft has demonstrated a strong ability to innovate and adapt, the competitive landscape remains intense, with other major players vying for dominance in cloud infrastructure, software solutions, and emerging tech fields. Investors and analysts are weighing the company's consistent revenue generation from its established businesses against the potential for disruptive growth from its newer ventures. The prevailing sentiment suggests that while Microsoft is well-positioned to capitalize on long-term technological trends, its short to medium-term performance may be influenced by the prevailing economic headwinds and the successful execution of its ambitious growth strategies. The company's ability to navigate these mixed signals effectively will be crucial in determining its continued success and its valuation in the eyes of the market. Understanding these nuances provides critical insight into the strategic imperatives driving Microsoft's decisions and its potential impact on the wider tech ecosystem. It's a complex financial narrative, and we're tracking every turn. Next, we'll see how specific deals and market volume shifts are affecting its stock price. Market dynamics and strategic pacts, a look at Microsoft's share performance. In the ever-shifting currents of the stock market, understanding the factors that influence share prices is paramount for investors and industry observers alike. Microsoft's recent stock performance offers a compelling case study in how a combination of strategic partnerships, market volume fluctuations, and evolving business restructuring can impact a company's valuation. Despite a notable drop in trading volume, Microsoft shares have experienced a positive uptick, signaling a degree of investor confidence that warrants a closer examination of the underlying drivers. This scenario highlights a common market phenomenon where share price movement is not solely dictated by the quantity of transactions, but also by the qualitative aspects of the deals being made and the broader strategic direction of the company. The company's significant pact with OpenAI, a leader in artificial intelligence research, continues to be a focal point for market analysts. This collaboration, aimed at integrating advanced AI capabilities across Microsoft's product suite, represents a substantial long-term investment in future growth. However, the complexities associated with restructuring and fully realizing the benefits of such a large-scale partnership can lead to periods of adjustment in trading volume as the market digests the implications. The reported fourth-place finish in terms of volume drop suggests that while overall trading activity may have decreased, the underlying sentiment towards Microsoft remains robust, with buyers continuing to support the stock. This resilience can be attributed to several factors, including Microsoft's dominant position in cloud computing through Azure, its consistent revenue from enterprise software like Office 365, and its ongoing innovation in areas such as gaming and hardware. The interplay between these established revenue streams and the potential upside from its AI ventures creates a multifaceted investment profile. Furthermore, SoftBank's involvement, potentially through funding or investment in related ventures, adds another layer to the financial narrative. Such strategic financial backing can provide crucial capital for research and development, enabling companies to pursue ambitious projects that might otherwise be constrained. The positive share movement, even with reduced volume, suggests that the market is factoring in the long-term potential of these strategic alliances and internal developments. It indicates that investors are perhaps looking beyond the short-term trading activity to the fundamental value and future growth prospects that these partnerships and restructuring efforts are intended to unlock. This performance underscores the importance of a holistic view when evaluating tech stocks, considering not only the immediate market signals, but also the strategic intent and the long-term vision that guide a company's trajectory. The ability of Microsoft to maintain positive momentum amidst a decline in trading volume is a testament to its strong market position and its strategic foresight in navigating the complexities of the global technology landscape. These market movements are critical indicators of underlying business health. We've covered a lot of ground today, from ethical considerations to market performance. That's a wrap on today's essential tech updates. We've seen how employee activism is reshaping corporate ethics, explored the real-world consequences of protests on employment, analyzed mixed signals in the stock market, and understood how strategic deals impact share prices. Don't miss out on future insights. Hit that like button, subscribe to Microsoft Sphere, and ring the notification bell. Also, share your thoughts in the comments below and follow us on all our social channels for more exclusive content. See you next time.